Hi, everybody, it's FIBO Group, and you're watching to the Market Watch Review. The market expects a soft US CPI print today, which has recently been associated with risk-on moves. The dollar has spent the last few days consolidating after selling off last Friday and Monday. The yen is the strongest of the G10 currencies today, rising more than 1% on a news report warning that the Bank of Japan could adjust its policies again as early as next week's meeting. Sterling is the second best performer so far today, up about 0.25% despite disruptive rail strikes. Meanwhile, Chinese officials are not protesting hard the strength of the yuan, which is at its best level since last August. Asian Pacific market. A report in Yomiuri, the Japanese newspaper, said that at next week's Banks of Japan meeting, officials will discuss the side effects of the extraordinary monetary policy and consider adjusting its bond purchases or other measures to counter the volatility spurred by last month's moves. The yen, already bid, apparently on lower yields ahead of the US CPI, rose to a new 6-day high. Separately, Japan reported its November current account balance swung into surplus 1.8 trillion yen after recovered a small deficit in October. Australia's November trade surplus rose to 13.2 billion from 12.7 billion of Australian dollars. Exports were flat and imports fell by 1%. It is the largest monthly trade surplus since June. The Australian dollar continues to consolidate within the range set on Tuesday. Market of Europe. The euro is firm after edging up to new 7-month high yesterday around $1.0775. It is trading within yesterday's half-cent range. Nearby resistance is seen at $1.08. It has not traded below $1.07 since Monday. Sterling, too, has spent the last few days consolidating last Friday and this Monday's advance that took from about $1.1840 to $1.2210. Market of America. The U.S. December CPI is center stage, and ahead of it already one regional Fed, President Boston's Collins, endorsed a quarter hike, while others have spoken have kept the door open to a 50 BP move. The U.S. dollar continues to trade within Monday's range against the Canadian dollar. It held above CAD 1.34 yesterday and so far today. A soft U.S. inflation print has been recently associated with strong equity market advances, and the Canadian dollar seems particularly sensitive. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.